Hi, this is Bennett Tchaikovsky, and welcome to using T accounts to determine the cost of goods manufactured. This is part 2. We're going to look at some sample problems. So the textbook references is that it's offered by Open Educational Resources, meaning it's free. And basically, this is a textbook of managerial accounting and was adapted by the Saylor Foundation. And my goal is to use Open Educational Resources throughout this, just so that I've had issues with publishers wanting to go through and say, oh, you can't use this particular question. So it's like, okay, then I'm going to go someplace else. And we can go here because there's been a huge push for zero cost textbooks, which is always our goal for our students. So a couple disclaimers here is that the information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College, the South Orange County Community College District, or Chapman University. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. The presentation is copyright 2019 by Bennett Tchaikovsky. I encourage you to share this presentation and share links to this presentation on an unmodified basis. If you modify the presentation in any way, please email me prior to doing so at bennett1812@gmail.com to discuss. Note that the author does not claim any copyright whatsoever in any companies or organizations mentioned in this presentation. Rather, the other parties are the owners of their own respective copyrights. Okay, so we're taking a look here at the sample question. And so this is a modified question from the Principles of Accounting, Volume 2. This was taken via OpenStax. And so this is problem A7, which is in chapter 4, and this is under a job order costing question, but I've modified it to be more in terms of like a introductory to what we're studying here in terms of managerial accounting. So right over here, we've got a lot of different items here. And so what we're going to have to go through and do is we're going to have to determine the cost of goods manufactured. We're going to need to determine the cost of goods sold. We're going to prepare a multi-step income statement, prepare the current asset section of the balance sheet. So rather than going through in terms of preparing a cost of goods manufactured, rather, what we're going to do is we're going to determine that cost of goods manufactured by using T accounts. So let's take a look at this real quick and we'll get ourselves set up. Okay, and we're back. So what we're going to do is we're going to use the T accounts to solve the first few parts of this particular question, which is really to go through, we need to determine the cost of goods manufactured, we need to determine the cost of goods sold. We'll prepare a multi-step income statement, and we're going to prepare the current assets section of the balance sheet. So as we go through here and take a look at these different items, let's kind of figure out where these should actually be going. So the depreciation on the factory building, and again, if you saw my prior video, which is the one that directly preceded this in the playlist, what you're going to find as well, that factory building depreciation is going to be going right here under factory overhead. So we're going to put depreciation of the factory building, bold BU, ILD, right over here for $100,000. Okay. My factory real estate taxes. Wow, it's got the word factory in it. So it is going to be a part of factory overhead. Okay, and factory utilities expenses. It's like, wow, right over here, 85 grand. Okay. The next part right here is it's giving me here factory payroll of $110,000. Now, if you've seen how I've done this question earlier, what we're doing is we're putting the total factory payroll right over here, much like we would do an expense. So my total factory payroll is going to go right here at $110,000. Now, what's going out of this? It's going to be direct labor, which in this case it tells me is $85,000. Well, where does direct labor go to? Well, it's going to be going over here to our work in process inventory. Again, if this does not make sense, please take a look at the prior video where we were showing what makes up each of these different ones. Okay, so right over here, I've got direct labor. of 85,000. Now, one of the things I may have mentioned to you in a prior video is that the only three accounts that are going to go onto our balance sheet are going to be these three right here, or ending raw materials, ending work in process, ending finished goods inventory. Okay, factory payroll and factory overhead must be closed out to zero. They have to have a zero balance because we have to apply these during the period. And if I look at right here, well, I've got 110,000 of debits. I have 85,000 of credits. So to make this account go to zero, I need a balance here of 25,000. And what we call this, because factory payroll is made up of two different things. It has direct labor, which directly relates to that manufacturing process, and it goes into work in process. The other thing it has is what we call indirect labor. And this indirect labor is going to be going from here down to here into our factory overhead. I cannot apply it to one particular job, so I'm basically putting it down here into my factory overhead. Okay, so that's our factory payroll. So I have here my raw materials purchases and my beginning and ending inventory. So the way I'm going to handle my raw materials inventory is I'm going to have my beginning raw materials inventory plus my purchases less the direct materials I put into production. That will be giving me my ending raw materials inventory. And this is what we would call direct materials to production. And then over here, we're going to have direct materials. Okay. So when we look at this right here, I have my beginning raw materials inventory of 30,000. My raw material purchases were 350,000. So my purchases were 350,000. My ending raw materials was 28,000. Okay. So right over here, as I'm looking at this particular question, does 30,000 plus 350,000 equal 28,000? The answer is no. Right over here, I need to determine what this value should be. So what this is going to be 30,000 plus 350 minus X, or the direct materials into production, is going to be equal to 28,000. So this right here is going to be 380 minus 28 equals X, or this is going to be 352. Okay, so when I put 352,000 in here, does this work? Well, 30,000 plus 350 minus 352 gives me 28,000. So right over here, my direct materials used in production are going to be 352,000. Okay. So let's go ahead and look at the next one right over here. I have a beginning work in process inventory. Beginning work in process inventory was 51,000. And my ending work in process inventory was over here at 67,000. Okay. So the other items were given over here. We're given beginning finished goods inventory of 20,000. And we're going to give ourselves a little bit more room. So my beginning finished goods inventory was 20,000. My ending finished goods inventory was 100,000. Okay. Now, keep on going down this list over here. So sales, selling expenses, general administrative expenses. So does sales go into any of these types of accounts? And the answer is no. Sales is just what we sold of our product. It is not a part of cost of goods sold. Remember, what we're dealing with here is what we call product costs, meaning that what is it ultimately that we need to do in order to get over here to cost of goods sold? And as a reminder, in terms of how we go through and do our multi-step income statement, we're going to have sales minus cost of goods sold is going to be giving us our gross profit. Okay, so it does not mean disgusting profit. It essentially means that, okay, how much money are we making off of the sale of our inventory? And then we're going to have less SG&A. What does SG&A stand for? We can have our selling expenses. We can also have general and administrative expenses. So we have our total SG&A. And then when we take our SG&A, and we subtract it from the gross profit, we're going to end up with our operating income. So for right over here, as I'm going through and looking at my sales, well, my sales were about $1 million. My selling expenses were $50,000. My general administrative expenses were $75,000. And then these other items down here, cash, AR, and goodwill, those are all balance sheet type accounts. So what I need to do now first is I have got sales, but I need to determine what is my cost of goods sold. So what I'm going to do over here is my factory payroll account is 0. My raw materials account here is $28,000. Okay. Now, and when it comes to over here for my factory overhead, I have the depreciation on that factory building. I have my factory real estate taxes, and I had over here my factory utilities expense. And then I have my indirect labor. These are all what we call product costs, or costs that relate to that production. And so really what we're kind of considering here is anything that's going on inside of the factory. It does not include selling or general and administrative expenses. Okay, so my total factory overhead is going to be the sum of these four values right here, or $225,000. Now, if you watch the other video, what you saw is that, well, wait a second. This factory overhead has to have a 0 balance. So what I need to do is I need to credit factory overhead right over here for $225,000 to get a 0 balance. But where does this go? For every credit over here, I need a debit. And so this is going to go over here into my work in process inventory. So this is my factory overhead. Okay. So my factory overhead here is $225,000. So when I'm looking over here at my total work in process inventory, I have a beginning balance plus my direct materials, plus my direct labor, plus my factory overhead is giving me ending work in process of $67,000. Unfortunately, 51 plus 352 plus 85 minus 225 does not equal 67. Rather, what I need to figure out is, okay, what was my cost of goods manufactured? How many goods did I complete? Or what was that dollar amount that I completed out of work in process? And I sent it over here to finished goods inventory. And this is what we call our cost of goods manufactured. So COGM is cost of goods manufactured. Okay. So I have over here, this is going to be 51 plus 352 plus 85 plus 225 minus y is going to give me 67,000. So if I add these up over here, I get $646,000. So if it's leaving work in process, where does it go? Well, my cost of goods manufactured is what is going. This is what I completed during the period. So I'm now looking at my finished goods inventory. So this first answer to this question is like, what is our cost of goods manufactured? Well, the cost of goods manufactured for this particular question is $646,000. So the next thing that I'm going to need to figure out is that, okay, that was my cost of goods manufactured. Now, what is my cost of goods sold? So here, if I look here, it is 20 plus 646 equal 100. And the answer is no. So what I now need to figure out is what am I putting over here to my cost of goods sold? So what it's going to be right here is you're going to have 20 plus 646 minus z equals 100. So if I put 20 plus 646, I'm going to get 566,000. Let's see if it works. Well, 20 plus 646 minus 566 is going to give me $100,000, which is my ending balance. So where does this go to? This is going to go to my cost of goods sold. So over here, my total cost of goods sold is going to be $566,000. This is what I sold, meaning what did my finished goods inventory decrease by, or how much should I sell? Okay, over here, cost of goods sold. So my ending balance in cost of goods sold is $566,000. Okay. So the next question I'm going to have to do is I'm going to have to go through and do a multi-step income statement, and it would help if I gave you the name of the company and the period ended. So we're going to call this is basically for Freeman. Okay, so let's call it here. This is for Freeman Furnishings for Freeman Furnishings. Let's call this here multi-step income statement for the year ended 12/31/20. Go to the future. So as you're watching this video, maybe in 2030, and you're looking back here, you're totally freaking out. Okay, so for Freeman Furnishings, when I'm doing my income statement, which we already kind of started doing right here. So when I'm doing this multi-step income statement, remember, what does multi-step mean? It means that I'm showing cost of goods sold separately as well as my selling, general, and administrative. So right over here, I'm going to have Freeman Furnishings. Income statement for the year ended 12/31/20. So right over here, my cost of goods sold was going to be $566,000. So my gross profit is going to be $434,000. My total SG&A is $125,000. So my gross profit is going to be my operating income is going to be my gross profit less my selling, general, and administrative expense for $309,000. So your instructor may have a different way in terms of if they like you to do it. They may want to see you do underlines, and you can do that. Generally, I've seen a lot of different formatting of income statement during my lifetime, but I'm not as concerned with the formatting for my classes as I am with you understanding the concepts. Okay. The last thing I'm being asked to do in this particular question is to prepare the current asset section of the balance sheet. So when I'm doing a balance sheet in the current asset section, what does current mean? Well, current means I'm planning on using it in the coming year. It's basically those assets I will be using in this coming year. So what is current? It's going to be cash, accounts receivable. Is goodwill current? The answer is no. That is a non-current, longer-term asset. It's not a current asset. So over here, when I'm doing my Freeman Furnishings balance sheet as of 12/31/20. So my assets, my current assets, my first item over here is going to be cash. So my cash over here is going to be 500,000. Accounts receivable net is going to be 60,000 right over here. And then I've got to deal with my inventory. So for my inventory, what I need to go through and do is my inventory for a manufacturer is really in three different components. I'm going to have over here my inventory. I have my raw materials inventory. I'm going to have my work in process inventory. I'm going to have my finished goods inventory. So my total inventory is going to be right over here. So for my raw materials inventory, so my ending raw materials inventory was $28,000. My ending work in process inventory was $67,000. My ending finished goods inventory was $100,000. So over here, my total inventory is going to be $195,000. So my total current assets is going to be the sum of my cash, my accounts receivable net, my total inventory, or a total of $755,000. So this is a sample question. Again, there's some things that I don't include on this intentionally, as you'll be looking at it in a future chapter, but I want to really encourage you to be using these various different T accounts to really help your understanding of this. And again, I'm just going to pause really quickly to kind of show you what a cost of goods basically what a cost of goods manufactured statement looks like in case you're asked to prepare it for a different class. So this is a sample of a cost of goods manufactured. This is essentially what we're doing in the T accounts. The three true components in terms of what was actually manufactured during the period. And this, again, kind of go through and just kind of think about this intuitively, right? So what is going in there? It's going to be my direct materials, meaning what I put into production, the labor that I directly use, plus my overhead. And I'm also, whatever I have in there at the beginning, less my ending inventory, is going to tell me what I transferred out on my cost of goods manufactured. So essentially, by going through and doing the T accounts, you're kind of getting down to the same answer. I prefer T accounts just because, to me, it's a better visual representation about how to compute these types of problems. But if you needed to go through and kind of take what we've been doing here into this, it's kind of not that hard. It's basically my beginning plus my purchase gives me my raw materials available, less my ending inventory is coming up with my raw materials used in production, which is going to be right here. Then we get into the next part of this over here, which is going to be my direct labor right here. Then over here, they're listing out the different components of factory overhead, which is in my, basically in my question right here, this is going to be right down over here. So that's where that number is coming from. It's coming from our factory overhead T account. Then we're going to be adding in that basically that beginning work in process, which is right up here, that 51,000. And that's going to give us our total amount available, less my ending work in process, which is right here, is giving me my cost of goods manufactured. So this is a more formalized statement. So if you have an instructor that's looking for something like this, I would still use the T accounts just because, to me, it's a better understanding of the process flow. So in any event, hope you have a great one. I will see you on the next accounting video. Have a great day.